Hi everybody. I wanted to unpack the relationship between interest rates and share markets. So for quite a while now, we've been experiencing an environment where interest rates are reducing around the world. And that means that people that are used to generating quite a bit of income from interest-bearing investments, such as corporate or treasury bonds, aren't able to generate quite as much income because as interest rates come down, so does the interest payable on investments like that. So what tends to happen is investors still want to seek an adequate return for what they're wanting. So they might look elsewhere, and often they look to share markets because they say, if I'm not really going to generate much income or interest out of my normal kinds of investments, well, I might go invest in shares and get some dividends or a bit of growth instead. So that often picks markets up a bit. Now, the inverse is also appropriate too. So when we find that interest rates around the world are starting to increase again, what can happen is people can say, those investments that I used to use, like bonds and whatnot, are going to start paying more and more income. I might sell out of the share market and move back into my safe zone in bonds and treasury bonds. Now, what happens is it can create quite a bit of volatility if the market's not ready for it. So towards the end of February, start of March this year, what we saw was the long-term interest rates and the long-term yields that people can expect to generate from things like bonds was increasing, but increasing faster than the market expected. That spooked them out a little bit because they're starting to think, well, if the market is expecting inflation to remain quite low, but interest rates go up, that can be signal for pressure. So they might be getting a little bit scared and say, that's it, I'm getting out of the share market, I'm just going to go into the safety zone of bonds. So there's quite an interesting relationship that interest rates have with share markets around the world. And so much of that volatility that we saw, as I said, at the end of February and start of March, was because rates were forecasted to increase in the future, but quicker or more impactful than the market first expected. So there is quite a relationship there, and there's a lot of other factors that go into it, but interest rates really do have a lot to say in how investors are going to act.